Hello and a warm welcome. You're watching the big India Today Economists Roundtable on a day when the Modi Sarkar presented the economic survey for this year. 5 big questions, 4 top economic voices, some of the sharpest business voices, economic voices, most respected voices coming up on India Today over the next 1 hour. Here are the questions we'll be looking at very carefully in this discussion on the state of the Indian economy. Question number 1. Will the economy recover fast enough to meet the Modi government's 7% growth target for 2019-20? Remember, in the last quarter when the GDP numbers came down, the economy's growth rate fell to 5.8%. Every economic marker suggests that the slowdown is continuing. Can the economy bounce over the next 3 quarters to be able to hit that target? Question number 2 on this Economists Roundtable on India Today. Can Nirmala spark a consumption boom in the short run? What are the policy interventions, the announcements that are required to reverse the decline in private consumption? What can be expected in the union budget for this year? Question number 3 on the Economists Roundtable. What can government do to spur private investment to start investing once again in the India story? India Inc. isn't investing in the India story in aggressive fashion. To be able to create jobs, the government needs private investment to kick in. What should and what can be done to get the private sector to start investing? Question number 4. If the economic survey is an indicator, what kind of budget should we expect Nirmala Sitharaman to present? That's very crucial because there are very interesting indicators about the government's economic thinking. What does it indicate about what we can expect in the union budget tomorrow? Will the government be able to deliver on flexible labor laws? There's a lot of discussion around the Rajasthan model, the need to ease, not necessarily head towards hire and fire, but definitely ease the ability of private companies to be able to bring employees on, take them down, depending on how they are placed economically. Will the government be able to deliver on this? Given global headwinds, in the fact that tariff wars happening, trade wars happening, is it possible to grow the export pie? So those are the questions we'll look at. We'll be joined by some really sharp, smart economists to discuss this. Here are some reactions from what the chief economic advisor, the man who put together this economic survey. Let's first listen to the government's voice and then we kickstart our discussion this evening.
So the theme of the survey is captured by this vision, and that's why the central gear here is hashtag economy at 5 trillion. That's the vision that I just described, said by the Honorable Prime Minister. The survey talks about the blueprint for achieving this vision, and the key theme here is shifting gears through a virtuous cycle. As I'll just quickly describe, we have been growing at a good rate, but we now need to be shifting gears to grow at 8% continuously in a sustained manner. And that is what this strategic blueprint is about. This blueprint we intend to achieve by setting the economy on a virtuous cycle, with investment as the key driver of that virtuous cycle. We can go from Beti Bachao, Beti Padhao to Badlav, which is basically an anagram for Beti Aapki Dhan Lakshmi or Vijay Lakshmi. We can go from the Swachh Bharat mission to Swasth and Sundar Bharat mission, a healthy India and a beautiful India. We can go from the Give It Up LPG subsidy, which really brought in for the first time thinking about giving up our subsidy for the benefit of those who deserve it more, to thinking about all subsidies. When we consume a subsidy, are we depriving someone else who's more deserving of that subsidy? And here again, behavioral economics can really help in bringing about that change, from going from possible tax evasion to tax compliance. And these are all steps that will really help in taking us to that vision of economy at 5 trillion. A second complementarity that is important for us to focus on is the impact of investment rates on jobs. Here what you see is an increase in the investment rate brings down the unemployment rates in various economies, and that's the other complementarity that is quite important for us to focus on. Therefore, the two key departures that we make from traditional economics are as follows. First, the economics of equilibrium. As I just showed you using the Chinese experience and what we've seen with other high-growth East Asian economies as well, these high-growth economies set out on a virtuous cycle. And that is what enabled them to increase the per capita GDP and thereby create welfare for their citizens.
Joining us on this Big India Today Economists Roundtable, I want to introduce our guests, starting with Sajid Chinoy, Chief India Economist at JP Morgan. With us on this broadcast, Nilkant Mishra, Managing Director of Credit Suisse India. Jay Panda is the National Vice President and Spokesperson for the Bharatiya Janata Party. With me in the studio, our Managing Editor for Business, Rajiv Dubey. Question number one on this Economists Roundtable: will the economy recover fast enough to meet the government's target of 7%? I put that question first to Sajid Chinoy. We saw in the last quarter when the GDP numbers were released that the economy actually slowed down to 5.8%. Every economic marker we've seen released over the last few days suggests that the slowdown in the economy continues. Do you believe the government is being overly optimistic when it says that the economy will recover to grow at 7% this year?
Rahul, I think 7% is achievable, but it's not a fait accompli. It won't be trivial to achieve. There will be specific measures that India will have to take in the next 3 or 4 quarters to get to 7%. What are the problems? You know, we had a survey number that came out yesterday, the PMI surveys, which unfortunately suggests the momentum continues to slow. Those were at a 13-month low. And apart from that, we're seeing a global economy that's decelerating quite rapidly because business uncertainty around the world has increased sharply on the back of the US-China trade war, and we've seen global capex basically come to a stall. So what are the things that India needs to do to get to 7%? I would argue in the next 12 months, there are about 2 things. Perhaps the most important is fixing our financial system. Ultimately, that's the plumbing by which any monetary policy easing or rate cuts by the RBI get to the real economy. And what we've seen is a lot of stress in the NBFC sector. So hopefully, you know, the government through decisive action will at some point initiate what we call an asset quality review and ensure that, you know, some of this what we call asymmetric information gets dissipated and NBFC start lending again. Some of that slack is being picked up by public sector banks. But again, there are issues there. Some public sector banks need more capital, so I think recapitalizing some of these banks will be important. And we also want to ensure that along with capital, governance reforms move hand in hand. What we don't want is for bank credit growth to pick up rapidly again, only for us to have an NPA crisis down the line again. So I think getting the financial system stable and working again so that credit is allocated efficiently should be the topmost priority. The second has to be the rural economy. We've seen rural consumption slow, agriculture is under some stress, the monsoon is off to a bad start. So I think a series of measures will be needed, not just to boost productivity. The problem in agriculture has been the terms of trade have moved against agriculture. So we want to at least push up food prices to some extent so that there's more purchasing power for farmers. And you do that by, in a way, abandoning all these archaic laws that put restrictions on farmers to export, to sell, and to open up the market. So I think the focus over the next 12 months has to be fix the financial system, fix the the terms of trade. If we do that with a little bit of help from the global economy, we may get to 7%.
Nilkant Mishra, in your view, what will it take for India to grow at 7%? Given the fact that the global economy is decelerating, given the problems in the Indian financial system, is the government being overly optimistic in your view?
I think a lot of effort is needed. I totally agree with Sajid that I think the financial system needs a much bigger fix than what we have seen so far. The government needs to get its mind clear on what it wants to do with the PSU banks. The earlier optimism, or the hope rather, that the system would get privatized by stealth, that the private sector would keep gaining share and PSU banks would lose share. I think that clearly that model is not working, especially as the NBFCs have slowed. I think the government's stated objective of disinvestment, the long list of targets that was given by the Niti Aayog in 2016, and from what I understand, it was approved, most of it was approved by the cabinet as well, but we have not seen meaningful progress on that yet. There needs to be an acceleration of that process. There is a lot of unused asset in the government. There are defunct plants sitting on thousands of acres of land at a time when in the US-China trade war there is a significant opportunity for India, and most manufacturers want a clear land title at an affordable price, and they can actually move significant amounts of production from China to India. So it can solve many problems. It will give the government much needed funds so that even if it was to stimulate some activity, invest a lot more in infrastructure, I think all of those steps have to be needed. So we also need significant rate cuts. I think that interest rates can be as much as 2% points lower in a year from now than where we are now. So a combination of all of these would be needed. Otherwise, the 7% growth target may turn out to be quite a bit more optimistic.
Jai Panda, in the statement that's been put out by P. Chidambaram on the economic survey, he says you're expecting to grow at 7%, but you're not doing enough to explain how you hope to recover and grow at that level. He says it appears to me that the government speaking through the economic survey is pessimistic about the economy.
Not at all, and let me do the explaining now. So first of all, let's understand something. It is indeed true, as some of my co-panelists pointed out, that the Indian economy's slowdown in the last year was in the context of a global slowdown. So that's one of the reasons that we'd had a dip. But if you look at this survey carefully, it analyzes that it's not that the entire global economy is 100% slowing down. There's about 30% of the global economy has brighter prospects than the rest of the 70%, and India is clubbed in that category. The second argument I make is that a lot of groundwork has already happened in the past 5 years, and they're beginning to kick in. So for example, GST, the single biggest economic reform in 70 years, had a lot of teething troubles. We know all about that. Now, after many of those teething troubles have been solved, you are seeing in the past 3 months, each of the months, we've had GST revenue collection of more than 1 lakh crores
Not in this month. Not in the last month for which data came out, is less than 1 lakh crores.
And so the previous 3 months leading up to May. Now, you might have a monthly dip, but if you have 3 months of steady growth of above, steady collections of above 1 lakh crores, that's something that should be given a lot of importance. Now, another thing that happens is that sometimes just based on quarterly numbers, a lot of hype or a lot of pessimism is spun. You've heard this hype and pessimism when it comes to industrial growth. You've heard it about exports. But when you look at the annual figures over the past 2 years, we've had growth in exports. We've had growth in gross value added in industrial production. So this is something that I think is optimistic. Finally, it's not just policies where you're seeing structural reforms such as GST. Look at infrastructure. One number I give out, which is in this survey, is quite stunning to a lot of people. India has 1,32,000 kilometers of highways, and fully 20% of that was built only in the last 4 years, which means out of every 5 kilometers of highways, 1 kilometer was added only in the last 4 years. Now, this is going to have an impact on the economy going forward. This is going to have an impact on freight, and many other such examples that I can give you. And one more thing that I think is encouraging is rural income growth is showing a turnaround since the middle of last year. Since July of 2018, rural income is beginning to show a turnaround for the better.
What are the government's estimates based on?
So I will summarize by saying this.
Economic survey, they're saying that because there was political uncertainty, therefore growth tapered out. Now that there is a stable government, they're expecting the economy to bounce back.
They're saying, the oil prices will be more stable next year. In fact, will be lower. They're saying that the investment cycle is reviving. But there are, when we know that the economy is decelerating and it's probably the first quarter of this fiscal is going to be lower than 5.8%, then that 7% number looks really distant. To my mind, you have to do 3 things, in 3 different ways. You have to have immediate measures, you have to have short-term measures, and you have to have long-term measures. Immediate measures have to be around consumption, driving consumption. Whichever way possible, whether you want to reduce interest rates or give more investable surplus to the corporates, more disposable income in the hands of individuals. Medium term, we have to look at bank reforms, we have to look at NBFC reforms. Now that's another great crisis that is there in our hands. We have to simplify GST, and we have to work on stalled projects. This is the medium term measure. Long term, we have to work on industrial policy, we have to work on administrative reforms, we have to work on judicial reforms. So we need measures which will kick, which will first stop the deceleration and put us back on the growth path. Right now, we are not even on the growth path. One of the alarming figures in this survey is that our services sector has started slowing down, and that's a huge huge problem, because 55-56% of our economy is the services sector.
Samiran Chakrabarti at Citibank, do you believe that the government will be able to meet this growth target of 7%, or do you believe the chief economic advisor has been overly optimistic given the fact that the economy is currently decelerating and therefore it's highly unlikely that we'll be able to bounce back fast enough to hit that target?
So we don't think that 7% is quite an unrealistic target. In fact, our own house view is that it will be about 7% with some downside risks. Let me just break it up quickly. I think the problem of rural demand would get somewhat elevated this year if monsoon comes back on track and we see some pickup in food inflation. That helps the rural demand part. There has been significant government spending of more than 1 lakh crore after the elections got over. So through a little while, this will feed into the rest of the system and help growth. Monetary policy, there's been a cut of 75 basis points. We expect another 25-50 basis point of rate cut. So with a lag of about 3 to 6 months, that should start having impact on growth. And last but not the least, the complicated problem is the financing problem for urban consumption coming from the NBFC crisis. That's an area where we believe that there is no immediate solution in sight, and it could be a slow grind before which things improve further. And that's the segment of the economy which keeps us that downside risk to our 7% growth number. But otherwise, we don't think it's a completely unachievable number for FY20.
Okay, Sanjeev Sanyal is the Principal Economic Advisor in the Ministry of Finance. He now joins this discussion. We've heard from Sajid Chinoy, Samiran Chakrabarti and Nilkant Mishra on their views of why and what the government needs to do to hit that 7% target. But I want you to address this question, Sanjeev Sanyal. Given the fact that the economy is still decelerating, given the fact that we saw, for example, in the automobile sector, growth decelerating by double digits for a third straight month, multiple markers suggest the economy is still in slowdown mode. How do you hope to be able to bounce back fast enough to hit 7%? Sanjeev Sanyal.
So we are entirely aware that the economy is slowing down. So I'm not denying that. In fact, much of this debate got triggered by a finance ministry note. So we are aware that the economy is slowed down. However, we feel that we can begin to accelerate the economy if a bunch of reforms are put in place. And by the way, the survey, the focus of the survey is not so much on the annual growth rates, but on an overall target of about $5 trillion that we have over a period of time till 2024-25. And that requires us to hit a 8% real GDP growth rate over several years. And as we have pointed out in the survey as well, this requires us to pump up our investment rate to over 35% of GDP. Now, I agree that that is not an easy thing to do, but I would posit that it is an achievable thing to do, and it will require us to do a whole bunch of things. And so the idea behind the survey is to lay out some of the things we need to do and then hopefully be able to implement them. So this $5 trillion economy is a target. It is not a forecast. It requires us to do the things that we have to do so that we can get on with reaching it.
Okay, let me take question number 2 on this economists roundtable. What can the government do to spur the private sector to start investing in the India story? What can the government do to spur the private sector to start investing in the India story? We saw data released recently, and I'll start this time with Sanjeev Sanyal, say that investment is at a 15-year low. Clearly, for various reasons, and tax terrorism, agencies being overactive are part of them, India Inc. at this moment isn't enthused about opening purse strings, taking big risks and investing in the India story. What do you believe, Sanjeev Sanyal, the government can do to make that happen? Because everything else, everyone watching this discussion wants, whether it's jobs, whether it's good appraisals, good increments, all of that happens only if there's investment activity. The animal spirits of the economy need to be revived. Sanjeev Sanyal, what's your plan to be able to do so?
Fully agree with you that investment, particularly private investment, is key to this growth, and we have been very clear about that in the economic survey. We in fact make exactly the same case. So what do we need to do? Well, first and foremost, necessary but not sufficient condition is to lower the cost of capital significantly, and there is scope enough to do this in a country where we have now quite successfully for many years now been able to target inflation at 4%. It makes no sense that there are companies still borrowing at 12%. So we need not just, of course, the RBI lowering rates, but the transmission of this needs to be set right. So we need to bring down the entire structure of interest rates down, and so this is will be a focus area for us going forward. But if we lower the cost of capital by a couple of 100 basis points, let's say, that would make the situation much better. Similarly, an important thing that we have found both in our talks with industry, as well as you can see that from the ease of doing business indicator of the World Bank, that enforcement of contracts is possibly the single biggest hurdle in getting investment going. We are ranked 163 on contract enforcement out of 190 countries in the world. That basically means that all the countries that are below us are either at war or in a very bad shape. Now, we have looked at this very, very seriously, and you will see a whole chapter on the legal reform. But even there, it's quite interesting what we found, that although we have 35 million cases stuck in the legal system, we put some numbers together, how many additional judges and how much efficiency gains is needed in order to get the legal system moving again. And we discovered the numbers are large but achievable. They're not very large numbers that we'll never manage to solve it. In fact, we show that with fairly achievable efficiency gains and numbers of appointments, we can actually completely clean up the backlog within 5 years.
Samiran Chakrabarti, what is it that you believe the government needs to do to get India Inc. to start investing? Because everything else can be written down on a sheet of paper. Till the time the Indian industrialist starts investing in the India story, all these targets are tough to meet.
Absolutely. I think the key issue is about animal spirits, and the unfortunate situation is that the more prolonged the investment slowdown is, the animal spirits get depressed even further. And one of the things that's suggested in the eco survey is what Sanjeev was mentioning about the issue of cost of capital being too high, which affects animal spirits. The other thing which the eco survey talks about, which is critically important, is policy uncertainty. I think that's another thing which affects animal spirits badly, and we need to address that problem as well. And last but not the least is that there is significant excess capacity in certain sectors where we are not going to see substantial investment coming in from the private sector. So to what extent the complementarity between the public sector and the private sector can be exploited in the near term, that's something which we have to really work on. I think there is some space for the public sector to invest further, and that could kickstart the animal spirits in the private sector as well.
Sajid Chinoy, the government can't go with a hunter and forced industrialist to start investing. Cost of capital is only one issue, but a lot of people speaking in private speak about fear. They speak about uncertainty. How real is that fear? Is that what is holding India Inc. back? How do you believe Nirmala Sitharaman and the likes of Sanjeev Sanyal ought to be addressing that?
Well, firstly, I want to compliment the survey, because I think we do need to get into a virtuous cycle, and any virtuous cycle must have investment at its heart. Now, I think there are a few things that can be done. One is, if you look at where the investment slowdown is, it is commonly presumed this is large corporates. But really the slowdown is in household and SME investment over the last 5 or 6 years. And again, the survey spends a fair amount of time looking at improving the economic viability of the small and medium enterprises. A lot of this is going to come back to what we discussed earlier, which is fixing the financial system, because over the last 5 or 6 years, given the troubles that public sector banks have had, now NBFCs are having, small medium enterprises have been the biggest casualty of being starved of credit. So I think fixing the financial system is clearly one part of it. The second part is, firms won't start investing, especially given the excess capacity globally, unless capacity utilization goes back up above 80% or so. So investment is endogenous, it reacts to demand. The first thing is to stabilize economic demand. The third thing I think is we need a huge public investment stimulus. These have the largest fiscal multipliers. This is the best way to crowd in the private sector. Now the real question is, how do you marry the need for a public investment stimulus in a slowing economy with these fiscal targets? And what I have proposed repeatedly is this is the time, the first budget of the second term, to aggressively target asset sales. If we can sell assets, recycle existing assets, undertake disinvestment, then the government has a pool of resources that can be earmarked for public investment. So
no, but the problem there, Jai Panda, is disinvestment and asset sales, especially of, the Prime Minister told us in the interview we did in Varanasi, he still believes the government has no business of being in business and he'd like to sell public utilities which aren't doing well. But we haven't seen the government push through. And therefore, on the issue of disinvestment numbers, there is a lot of wariness that they'll do some jiggery-pokery, some jugglery, one public company buying stakes in another public company, leading to no genuine shift in management. Therefore, those disinvestment numbers mean very little. Do you believe that the next 5 years will be different from the last 5?
Sometimes even trying to have genuine disinvestment, as you call them, is not easy. You will recall that the effort with Air India, which routinely every couple of years sucks a few thousand crores out of the treasury because it can't meet its expenses, it didn't happen, and there was no jiggery-pokery. It was genuinely that it didn't attract enough investors. But I expect that more serious effort will be made to take care of some of these white elephants, which, as other panelists have pointed out, are sitting on immense amounts of land and other assets which are not. Now, the basic question about how do we go about achieving these targets, it comes down to several oft-repeated solutions. Now, Sanjeev Sanyal has already pointed out about interest rates. Now, we had a bizarre situation for many of the last 5 years when we had low inflation but high interest rates. And it was a conflict. It went against investments. Similarly, if you talk about labor laws or you talk about land acquisition, please remember, in the Modi government 1.0, the first major initiative taken by the government towards this was an attempt to reform land laws. And what happened? The entire opposition ganged up, and it was left for another day to fight that battle. So any action has to be thought through.
No, but Nilkant Mishra, the fact is, this is a unique opportunity. The mandate of 2019 is about as big a political opportunity as any Prime Minister, any government is going to get. The opposition doesn't know which side the sun's coming up because they don't know whether Rahul Gandhi is in, whether Rahul Gandhi is out. If there is ever an opportunity to push it through when the opposition is down, to do what's good for the economy, even if there is a bit of a political backlash, this is the moment. Will Narendra Modi bite? You have deep thoughts on, what kind of an economic reformer Narendra Modi is. What's your sense? You've had multiple interactions with him. What's your sense of the thinking at the highest levels of government? Will the government do what's good for the economy even if it's bad politics?
So I think a lot of the, I think the desire is there. I think as we have been discussing, and then almost all of the co-panelists have voiced ideas that I fully support, lower rates, greater disinvestment, and all of those things. As I think the leadership also has acknowledged, I think the ideas have all been there in the realm for a long time. As you know, the first time administrative reforms were discussed was 1965, and lateral entry, etc. It's now the time has come to actually do some things. In fact, when it comes to easing the environment in which small and medium enterprises work, in addition to all the things about lower interest rates, etc., is also this issue of easing labor laws. I mean, if you have 50 central laws and 250 state laws to comply with, while it may be possible for someone who's employing 1,000 workers, if you're employing 50 to 100 workers, which is the largest number of enterprises in India, you struggle to comply with these laws. So simplifying them, and from what I understand, some of those processes are very much on. I think that it's, I think the ideas are all very clear. It is time now to start acting on them. Many of these things, especially things like disinvestment, especially using some of the unused assets to attract foreign companies which want to move manufacturing out of China, to create a conducive environment where they can shift capacity very quickly, and in the process create significant amounts of exports, jobs and investment in India. I think those are mostly administrative things, and they require the bureaucracy to move very fast. And I think those changes don't even require, in many cases, any major majority in the Lok Sabha or the Rajya Sabha. So I think and I expect that we should see some action on that in the coming quarters.
Rajiv Dubey, Jai Panda mentioned the case of Air India. One of the reasons why the disinvestment of Air India failed is that the government wasn't willing to write off loans, because it would have seemed as if ye soot boot ki sarkar hai, they're selling it to their private friends, Ambani or Adani may have taken over. There would have been a backlash, and the fear at the back of the minds of the political leadership would be that this could give the opposition a chance to bounce back, because it cost Vajpayee dear. Will they be able to push through?
So frankly, there's a pattern that we have seen as far as Air India, BSNL, these entities are concerned. Every time the new minister comes in, he starts seeing this as part of his kingdom, and that he doesn't want to part with it. Basically that.
And they think they can fix it.
And they think they can fix it, and they invest enormous amount of money. Air India has taken 55,000 crore in the past 10 years. It wants another 25,000 crore. Now the telecom minister wants to invest 75,000 crore into BSNL. These are not things that, these are not the intent, this is not showing the intent of government not being in business. And what we understand, what we have understood so far from our discussions with the Department of Disinvestment, is that the government is scared that it doesn't want to create princelings and oligarchs, as these are in quotes, out of its disinvestment process. So it's worried that it might create a scandal out of these assets, if at all they want to sell, being taken over by private sector.
But the scandal doesn't need to be real, as in the case of Rafale. It can be an imagined scandal and can create enough trouble for the government. I want to come to the next question on this big economists roundtable. I hope you're enjoying this discussion. If the economic survey is an indicator, what kind of budget should we expect Nirmala Sitharaman to present? Let's now get a sense of how deeply these leading economists have read the budget and how much they can read Nirmala Sitharaman's mind. So I'll start with Neelkant Mishra. If the economic survey were to be an indicator, what do you think Nirmala Sitharaman will do when she stands to present the union budget?
So the first and foremost, I think this linkage between the economic survey and the budget is something which I don't think exists. They are just temporarily contiguous, so one comes one day before the other. Other than a broad commentary on the domestic economy and the momentum, they are written by people who are not talking to each other mostly. So it is not that the budget makers are really seeking what is going into the
I want to know if Sanjeev Sanyal agrees with that. You're putting all these reams of paper together. Neelkant suggests that those who matter don't even read what you're writing, and that's pretty pointless. Do you agree, or do you believe there are some serious...
No, I didn't mean to say that. No. But no, as Sanjeev has been saying, this is a roadmap for the next 5 years. This is not meant to be what's going to come. The budget is an accounting exercise.
Okay, go on, but respond to my question. Let's hear what Sanjeev Sanyal is saying, that the two aren't necessarily linked. Do you believe that the economic survey does lay out a direction which is likely to be followed up on in the union budget? Sanjeev Sanyal.
The economic survey is made up of 2 volumes. One of them is a descriptive volume of what is going on in various arms of the government. And the first volume is ideas, particularly in the context of, in this case, of the $5 trillion target and putting a blueprint together for that. So yes, many of the people who work on the budget also work on the economic survey. So yes, they do talk to each other as it happens to be. But I think, as Nilkant just pointed out, the budget is ultimately a fiscal accounting exercise, and there is a general link between them, but it need not be a one-to-one link. But of course, I am not in a position to say anything about how this particular economic survey will link to tomorrow's speech. As you can imagine, I can't say anything about that at all.
Sure. Sajid Chinoy, if the economic survey is an indicator, what do you expect Nirmala to say?
Well, again, with the caveat that the economic survey is a 5-year roadmap, the budget, and so I think we should not overburden budget expectations to include all the ideas from the survey. I think a couple of thoughts do come through. I think the economic survey did lay a lot of emphasis on macroeconomic stability and fiscal consolidation. So I'd be surprised if there was any or meaningful deviation from the fiscal deficit target in February. The economic survey again spoke about the high cost of capital. So I expect in the coming months, the burden of adjustment to a slowing economy will be more from monetary policy, less fiscal policy. There was an excellent discussion on small, medium enterprises, and the fact that that is where the pain point is. So I'd expect there to be a fair amount of focus tomorrow on SMEs, on agriculture, on public investment. And I think the leitmotif of the survey, as Sanjeev pointed out, was this virtuous investment cycle. So even though tomorrow we won't expect allocations for all of these things, I'm hoping the budget will lay out a roadmap for some of these things: labor reforms, legal reforms, how to fund infrastructure, what to do on the financial sector, that will set the stage for this virtuous cycle of investment down the road.
Okay, Samiran Chakrabarti, your sense to the same question. You can de-link it. So let me reframe my question, since the economists don't necessarily think that the two are directly linked. What is it that you believe Nirmala Sitharaman will actually do tomorrow? And then we can check how deep an understanding Samiran had about what was going on inside Nirmala's mind. Go on, Samiran.
This is going to be Ms. Sitharaman's first budget, so it's always difficult for us to predict that how different she would be in her way of thinking about the economy versus her predecessor. So that makes the predictions about the budget a bit uncertain. But having said that, I think I agree with Sajid that one of the things that the economic survey is clearly saying is that we don't want to pump prime and get into this $5 trillion economy. That's not the way we want to achieve it. We want to achieve it in a cleaner way of promoting private investment, and through that trying to get into a virtuous cycle. So if that's what the survey is trying to say, and that's what the message from the finance ministry is, then it's good news for bond markets tomorrow that the fiscal deficit numbers are going to stay within what the expected range is. And the real challenge is that some of the ideas that we have been discussing in this show, these are not really new ideas that has come for the first time. The trick is that while budget is just an accounting exercise for the government, to what extent it can also throw light on these ideas, the predictability of within what time frame these ideas can be implemented. Let's not fool ourselves in saying that some of these extremely difficult ones will happen overnight. So even if we get some kind of idea on the time frame in which the government is considering them, I think that will be a massive achievement for the budget. And last but not the least, let me put one small thing in, which is that the economy currently is going through a somewhat of a softer growth patch. To what extent the budget can give a bit of a kicker to the economy at this point would also be watched closely by the markets.
Panda, there is no guarantee that even if a timetable is laid down, it will be followed, because Arun Jaitley spoke about reducing corporate taxes to 25% for all companies, including really big ones. But because it fell towards the election year, the government held back on that, promising to do it later. Because you're getting off to a new start with a big and renewed mandate, will the government be able to bite tough political bullets, or do you believe they'll just stay the course, stay steady and not do anything very dramatic?
Is that question to me?
Jai Panda, it is.
Yeah, well, look, I'm confident that you're going to see an approach by this Modi 2.0 government where bigger strokes will be played, where the challenges that we have for the next 5 years will be not dealt with tentatively, because as you yourself pointed out, the mandate is indeed larger. And I would like to say something else. There is indeed a connection between the economic survey and the budget, but not in the way as some people have been saying. It's not meant to be translated into an annual budget. Now, the economic survey takes stock of the situation and gives us possible roadmaps for the next 5 years. Now, every policy decision has implications. It has political implications, it has economic implications. So, not everything that the economic survey hints at is likely to be taken up in any 1 year, but many of them will be. I certainly hope that there will be an announcement on which will impact interest rates, which will impact many things. But take, for example, I mentioned earlier about the 132,000 kilometers of highways. Now, a lot has been added in the last 4 years, fully 20%. We should expect that to keep clipping on at the same speed, if not higher speed. And infrastructure growth is going to likely to be one of the major factors by which we can achieve this target of 5 trillion in the next 5 years. So there are many things. I'm hopeful that over these next 5 years, you're going to see rather bold steps taken by the government.
We'll slip into a very quick break right now. We've got on the show Nilkant Mishra of Credit Suisse, Sajid Chinoy, Chief India Economist at JP Morgan, Jai Panda, National Vice President, Spokesperson of the BJP, Samiran Chakrabarti, Managing Director, Chief Economist at Citigroup, Sanjeev Sanyal, Principal Economic Advisor in the Ministry of Finance. As far as economic minds go, it doesn't get bigger or better than this. In the last part of this broadcast, when I come back, what can Nirmala Sitharaman do to spark a consumption boom? Remember, it's not just India Inc. Even the Indian consumer, the Aam Aadmi, is not feeling very aggressive, very confident. He's cutting back on consumption. How can that be fixed by Messrs. Modi and Nirmala Sitharaman? We are counting down to Nirmala Sitharaman's first union budget. Over the past few years, the one engine that's been driving the Indian economy has been the consumption engine, which is now sputtering, and consumption has taken a hit. Joining us on this Economist Roundtable, we have Nilkant Mishra, Managing Director, India Head of Credit Suisse, Sajid Chinoy, Chief India Economist of JP Morgan, Samiran Chakrabarti, Managing Director and Chief India Economist at Citigroup, Jai Panda, National Vice President of the BJP. The question I'm asking now, what can Nirmala Sitharaman do in the short run to spark a consumption boom? And I put that question first to Sajid Chinoy.
Rahul, good question, but can I ask you, I think in a way we're asking the wrong question here. I think we have to realize in India, the marginal propensity to consume is very high. So if GDP growth were to get back to normal and incomes grow, consumption will take care of itself. I think the real question that we need to ask is to get to 5 trillion over the next 3 to 5 years. The dirty little secret is it's exports that will provide the answer. And here's why. To get 8% growth in the next 5 years, we need investment growth rates to pick up, as Sanjeev has pointed out. But for that investment to be sustainable, savings rates have to pick up in India. Otherwise, higher investment simply means a larger current account deficit and instability. So if savings rates are going up, actually consumption rates as a share of GDP have to be falling for savings rates to go up. The question then is, if consumption is falling to boost savings to finance investment, why will investment grow if consumption is falling? And the answer is it has to be exports. So yes, we need to stabilize consumption in the near term, but the only way India can get 8% growth and sustainable investment that involves higher domestic savings rates is to have double-digit export growth for the next 5 or 10 years. No country in the world has achieved high growth rates for a decade without exports. So the real question for the government the next 5 years is, in a global economy that's slowing, where protectionism is rising, how does India increase its global export share? And this is where I think we need to do the heavy lifting. We need to do much more competitive infrastructure so that those supply chains that Nilkant spoke about that are leaving China will even contemplate coming to India. We need labor market reform to make our manufacturing more competitive. We need the financial sector to be fixed, and we require a more competitive exchange rate. So I think that's the real question. Let's not get obsessed on consumption. If exports grow, investment grows, GDP growth goes, believe me, consumption will take care of itself.
Nilkant Mishra, how important is it for government to revive consumption? Auto sales, for example, declining, multiple other markers also suggesting a decline in consumption. Is it important? And on the issue of growing exports at a time when the world economy is decelerating, we're seeing what Donald Trump is doing with China and also with India. Does India really have a realistic chance of pushing its exports now at a super fast growth rate? Is that possible at all?
I think the possibility of supercharged export growth is definitely there. As Mr. Panda also mentioned, I think that there has been significant infrastructure improvement in the last several years. We have seen simplification of tax rates. I think there is much better availability of electricity. I think there has been significant improvement now with some prodding. We are starting to see, I don't know if you're aware, even before the trade war started, India's imports of semiconductor circuits, so it went from $2 billion in 2017 to $7 billion in 2018. Our imports of cell phones declined and our exports of electronics went up 30%. So that process has already started. I think we can step in. In fact, if you see alternatives to China, most countries in Southeast Asia just don't have the capacity. I think they're too small. It has to be an economy the size of India with a very large domestic market which starts to become the natural alternative. We need to work hard towards it. It's not inevitable, but I think it's very much possible. On the consumption boom, I totally agree with Sajid that it has to be driven by a growth in incomes. In fact, one of the reasons why our economy goes through severe cycles is what I call the pay commission cycle. Once every 10 years, about 3.5 to 4 crore people across state and central governments get a significant hike in their salaries and pensions. And that acts as a very big consumption booster. That is what had happened between 2008 to 2010 as the state and the centers and then the states did it. That led to a significant boom in consumption. And guess what? 2 years later, we had a big currency crisis. If you artificially boost consumption by just handouts, it actually results in, because someone has to pay for it. So what happens is you boost the consumption of the 3.5, 4 crore people in the government. I'm not saying it's not warranted. It's just that the side effect of that is that the consumption of the rest of the economy has to come down in order to adjust for that. Now, I think it's much healthier to support incomes. I think there can be a lot that can be done in the budget. For example, supporting the real estate market, which is currently going through a very severe stress. I think cash flows to that economy or to that part of the economy can help. I think creating a fund perhaps to revive stuck real estate projects. If developers have run out of money, they've half built the building, if the government can intervene, partner with a developer, put in some money, I think it will be profitable for the government, it can be profitable for the economy. But it has to be driven by income generation and not really direct support of consumption.
Okay, Jai Panda, what the viewers would like to see, slightly different from what the economists are suggesting. Viewers would love to see an increase in standard deduction, more money in the hands of the consumer. How important is it in your view to arrest the decline in consumption? And do you believe India has a chance to be able to super grow its exports given all the global headwinds that we are facing?
I agree largely with what has just been said by Mr. Chinoy and Mr. Mishra. Now, about trade wars, I want to make a point here. Trade wars can have threats, but they can also have opportunities. We've seen, for example, I want to give you an example in the trade wars between the US and China, for instance. We've seen some growth of exports in certain sectors in India, which weren't available to us in the past. So we can actually look at opportunities, and I think it's entirely feasible that our exports can rise quite sharply, even as there are global trade disruptions due to disputes between other large countries. That's one. Second, there are many things already happening which are either at a pilot stage or have already gone through proof of concept. Let's take administrative reform. This is something that was mentioned by some of the panelists little earlier on in this discussion. This is hugely significant because one of the basic problems in our system is with the rigidity of the iron frame, the steel frame, is decision making gets so delayed. So you saw the pilot project finally happen last year with about 10 horizontal entrants, lateral entries into government at a mid-level, at a joint secretary level. Now there is a proposal, it's already been noted in the, released and mentioned in the papers, about very large numbers of lateral entrants. I mean, I would personally love to see the government have talent. We already have Sanjeev Sanyal in it, but I would like to have people like Mr. Chenoy and people like Mr. Mishra and many others. It will help improve the decision-making process and the quality of decisions.
Put your hands up. Samiran Chakrabarti, Neelkant Mishra, Sajid Chenoy. If you're willing to give up your suits, put on a bandi, work with the government at a fraction of what you get paid, put your hands up. Do we see any of those 3 hands going up? None of them are going up. We have 10 more seconds. None of them are going up even yet. But I'm sure if a serious offer is made. Okay, Sajid's putting his hand up. Well done there, Sajid. Neelkant's putting his hand up as well. That's very interesting. Interestingly, I met a senior secretary in the government in a very sensitive post just this morning, and he said, you can bring these lateral entrants in, but if he doesn't have those 3 letters on his resume, the IAS, who's going to listen to him? So there is some backlash there as well, but it's interesting to see Neelkant Mishra and Sajid Chenoy both say they're willing to put their hands up if they're asked. The government does need some creative ideas on what to do with the economy. We've had a very fascinating conversation. Let's see what Nirmala Sitharaman does tomorrow. For the time being, Samiran Chakrabarti, Neelkant Mishra, Sajid Chenoy, Jai Panda, Sanjeev Sanyal and Rajiv Dubey for joining us on this India Today Economists Roundtable. Thank you very much. Slipping into a break, we'll track Modinomics 2.0 all through the day on Budgetary. Stay with us.
Thanks for watching the video. For more such news and updates, please like, share and subscribe to India Today. Also check out our other great videos from our channel. We know you would love to.